you get the point or not? If you don't get it, let me explain again. The point is about financial sector. They are the lifeblood of every economy, which simply means without the financial sector, the economy cannot function. Cannot be run, yes. Thank you. So what do? The management of money, saving, lending, investing, and transferring funds. All these things are done through the financial sector. What it does, it acts as a bridge. When you talk about a bridge, that's the gap between the savers and the borrowers. So it's in between the savers and the borrowers. Who are the savers? People who have money to save, the depositors. Then the borrowers, the firms, the government, because government can as well borrow money from you. They issue what we call bond. Bond. They issue bond. They need to borrow money from government can borrow money, yes. Individuals that have money could as well lend it out to government. But if government needs to borrow from individuals, government has to issue what we call bonds. Bonds. And that's about that. We'll talk about that another day. Then, the main components of the financial sector, we have the banks, the central bank, the investment institution, the insurance company, and the financial market. Banks, central bank, financial market, insurance companies, investment institutions. All these are financial sector, and they have different things that they do. I would advise you to be here than there. Look towards me, not here. That's what I saw, and I'm telling you right now. Any question about the components of financial sector? Yeah, we call it the component of financial sector because these are the branches of financial sector. These are what makes up the financial sector. The banks, the central bank, the financial market, the insurance companies, and financial institutions or investment institutions.
The insurance company, is it the company?
They transfer risk. Whenever you have assets, you want to insure your risk, you want to institution. We're going to talk about each one at a time. But we're just starting with what the financial sector is. Then, what are the functions of the financial sector? Number one, mobilizing saving. Through the financial sector, they collect money to save for customers. Collecting money from individuals. So as a saver, you can as well save your money through the financial sector. Do you get the point? Do you understand or not, please?
No.
Hello. Don't do that in my classroom. I teach, I don't play.
I don't understand.
Mobilizing saving. When we talk about mobilizing, it simply means they encourage you to put your money with them. They encourage. That's mobilizing. They call people to save. That is through the financial sector, number one. Number two, so this money is being saved, right? As soon as this money is being saved, it becomes a liability to the financial sector. What can they do with it? They lend it out. So they make profit out of it. Get out of my class. Get out of the classroom. Both of you. Yeah, both of you. Both of you get out of my classroom. Both of you get out. Get out with your bag. With your bag. This is your fortunate situation you put yourself into. Paying huge amount of money and I'm still kicking you out of my classroom because you are not supposed to be here. I'm denying you your rights and there's nothing to do about it because it's not sense. So I'm moving on. Yeah. Mobilizing saving, I explained it. The financial sector encourages people to save their money and that's what they do. Now, this money is being saved. As soon as money is saved in the bank uses the money to make profit because keeping money and putting it in the bank is a liability to the bank. So the bank is going to use your money. And that's what we said.
Stealing.
No. Stealing, how? That's why we have the bank and we have the individual who has money. And this is the bank. The individual will save his money into the bank. And there's an individual who needs the money, the borrower. So as soon as you save in the bank, this individual comes to get the money. And that is the assumption of what we call money. Let me finish, please. Money creation. We call it money creation assumption, which simply means there's an assumption that certain individual has a lot of money, which it's not safe to keep it at home, taking it to where a safe place, the bank.
Someone else takes it.
So the bank is going to be able to, because it's a liability to the bank. It's a liability.
Okay, then when the other person, this,
What? Yes, at the end of it, it's going to be based on interest.
what if the individual asks for his money?
It's not going to be a problem. Your money is always going to, you're not going to be the only one saving money in the bank. And not all individuals would need their money at the same time. And I'm talking here. If you know you cannot make sense, you get yourself out of here. I want people that will make sense in here. So the point is this, not every individual would go at the same time to get the money from the bank. That is a fact. So the bank knows this. So that's why they mobilize. That's why they mobilize. A lot of people would save to the bank. As soon as they save, the bank will not just give money out. The bank will give it to the individuals who are able to pay back. That's why the bank will do what we call KYC. The bank will do KYC on your account. Know your customer. The bank will not just give money.
What is KYC?
Know your customer.
What if they don't know their customer?
Or customer.
Mister, I can look like a good person.
No, it's not like that. They do a scan. You don't even know when they're going to do it. The bank does it separately without you knowing. Do you get the point I'm making here? So the point we're making is this. The financial sector acts as a bridge between savers and borrowers. And what they do is, the individual wants to save, the bank will give it out. If you sleep, sit down. The third one.
No, providing credit.
Providing credit, that's the loan. They give it out. I said that already. Please. I said they give out loans, lend. The next one, facilitate payments. You want to pay your, can you just sit down please? I'm going to finish this class. You want to make a payment to someone, you go through the financial sector. The last one, the second to the last one, risk management. You have your assets. You don't want to lose your assets. You put it in, you insure it with companies. You are transferring your risk to someone else, to the company. And the last one, supporting economic growth. Through the financial sector, you need money to build a house, you need money to build a school. Whatever you need money for, you get it through the financial sector. So these are the functions of financial sector. In the next class, we're going to talk about each component of this financial sector and their function.
Thank you.